In this video, I'll show you a simple RSI hidden divergence strategy that works in any market and has a high win rate. Let's not waste any time. Let's get right to it. Here's what you learn in this video step by step. Indicators used in this setup. For this setup, we'll be using three indicators: RSI, 200 EMA, and a faster MACD with shorter settings, 8, 21, 5. The RSI is the main tool here. It will give us our signal. But instead of using RSI just to find overbought or oversold zones, we'll use it to detect hidden divergences. So let me quickly explain what a divergence is. Divergence explanation. Usually, when price moves in one direction, the RSI moves in the same direction. For example, if price makes higher highs, RSI also makes higher highs. But sometimes they move in opposite directions. For example, price makes lower highs while RSI makes higher highs. This is called a divergence. There are two main types of divergence: regular divergence, hidden divergence. In this strategy, we only focus on hidden divergence because it signals that the current trend is likely to continue. Hidden divergence. Hidden divergence occurs when the price is in a pullback or correction and indicates that the current trend is likely to continue. There are two types: bullish or positive hidden divergence and bearish or negative hidden divergence. 1. Bullish hidden divergence. This happens during a pullback in an uptrend. Price makes higher lows while the RSI makes lower lows. This shows that the uptrend is likely to continue. 2. Bearish hidden divergence. This happens during a pullback in a downtrend. RSI makes higher highs while the price makes a lower high. This shows that the downtrend is likely to continue. Hidden divergence examples. Bullish setup. In this chart, the trend is up. Price makes higher highs and higher lows. RSI is also going up. Now the price pulls back a little. If you look at the chart without RSI, it may look like the trend will reverse. But using RSI, we can see a bullish hidden divergence. Price makes higher lows. RSI makes lower lows. This shows that the uptrend is likely to continue. And yes, the price keeps going up after the bullish hidden divergence. Bearish setup. Now let's see another example that shows a bearish hidden divergence. In this chart, the trend is down. Price makes lower lows and lower highs. RSI is also going down. Now the price pulls back a little upward. If you look at the chart without RSI, it may look like the trend will reverse. But using RSI, we can see a bearish hidden divergence. Price makes lower highs. RSI makes higher highs. This shows that the downtrend is likely to continue. And as you see, the price keeps going down after this bearish hidden divergence. Steps to enter a trade.
Determine the trend. First, identify if the market is in an uptrend or a downtrend. To do this, use the 200 EMA. If the price is above the 200 EMA, it's uptrend. And if the price is below the 200 EMA, it's downtrend. Next, decide which hidden divergence to look for. Bullish hidden divergence appears in pullbacks during an uptrend. Bearish hidden divergence appears in pullbacks during a downtrend. Sometimes divergences are not very clear. To make them easier to spot, switch from candlesticks to a line chart. This makes highs and lows stand out better.
2. Identify hidden divergence signals. Bullish hidden divergence or uptrend. Find the most recent swing low on both the RSI and the price. Draw a horizontal line at each of these points. Wait for the RSI to drop below its line while the price stays above its line. This is your bullish hidden divergence signal. Bearish hidden divergence. Downtrend. Find the most recent swing high on both the RSI and the price. Draw a horizontal line at each of these points. Wait for the RSI to move above its line while the price stays below its line. This is your bearish hidden divergence signal. Important: don't trade just because you see a divergence. Always wait for confirmation. This is the step most traders skip, and it's why they keep losing money. 3. Use MACD for confirmation. To confirm the setup, use the MACD 8, 21, and 5. In an uptrend, wait for the MACD line to cross above the signal line. In a downtrend, wait for the MACD line to cross below the signal line. This confirms the hidden divergence and increases the chance that the trend will continue. Entry and exit rules. For a buy trade, enter the market after the MACD confirms the setup. Place your stop loss just below the nearest swing low. Set your take profit at twice the stop loss. For a sell trade, enter after the MACD confirms the setup. Place your stop loss just above the nearest swing high. Set your take profit at twice the stop loss. Full strategy in action. And that's the full strategy. Clean, simple, and effective. You're no longer chasing random trades. You're trading with a clear plan and proven confirmation. Want to master all types of divergences, hidden and regular, with full details? Then make sure to watch this video next. Go try this strategy and let me know your results in the comments. And don't forget to subscribe for more proven trading setups every week. I'll see you in the next video, and happy trading!